Good morning. Hi, everyone. We're so excited to have you. Welcome to another episode of Bitcoin Answers. I am Lori Tiernan. You might notice Leah Wald is not with us. We have a very exciting day at Valkyrie. We are launching the WGMI ETF. So Leah is actually about to go on CNBC. So tune in a little later. We do have Stephen McClurg, our CIO, with us only for the first 30 minutes. We have Brian Heinrichs of Fourth Capital Bank, the CEO, with us. Thank you for coming, Brian. And, in celebration of our big ETF today, Bill Cannon, our head of ETF portfolio management, is joining us. Thank you, Bill, for being here. We're super excited. For those that don't know Valkyrie, Valkyrie is a digital asset manager. We are over $1 billion in AUM, launched in August of 2020. We have a range of products that seek to provide institutional access to the digital asset class, ranging from Bitcoin Trust, several altcoin staking trusts that actually produce a yield, DeFi hedge fund, and as you've heard, ETFs. We have 3 ETFs. We have BTF, which is our Bitcoin futures ETF. We have VBB, which is our balance sheet opportunities ETF. And then launching today, WGMI, which is investing in Bitcoin mining companies with a screen for usage of renewable energy. So really exciting stuff. I think I'll probably kick it off with jumping into the fireside. I think, Brian, if you can give a little background on yourself and Fourth Capital, that would be great.
Yeah, so thanks for having me. It's exciting to be on here. Congrats to the Valkyrie team. Big day with the new ETF. So cheering you guys on and hoping all goes well with that. Yeah, so my background, a little bit different than traditional banker. I actually started my career in derivatives trading. Spent about a decade there. And so I've spent most of my career in capital markets and then kind of moved over to traditional banking a few years ago. Met the owner of Fourth Capital and moved down to Nashville to kind of turn this into something special. We've got the mentality of a startup. Our whole concept is where digital tools meet human touch to provide a superior client experience. So we're all about kind of disrupting traditional finance and doing new and creative things, but doing it in a way where we're building relationships along the way. We're private, single shareholder, focused on the long term. So it gives us a little bit different mentality around things, whether it's in kind of the Bitcoin digital asset space or some of the other creative things that we're doing, because we're not thinking about quarter to quarter, we're thinking about years and generations and so on. So that's kind of us in a nutshell.
Amazing. And we talked about this a little earlier, and I'm really excited to dive into kind of how you first learned about digital assets, how you're incorporating it into your business. I know there's some exciting things that are happening at Fourth Capital in terms of Bitcoin integration. So I'd love to hear about that.
Yeah, I think that, I was thinking about this last night. For some of the folks that I'm looking at on camera, Stephen and Bill, I'm probably a little bit late to the party, but the first time I ever heard about this was probably around 2017, 18. And at the time I was spending a lot of my efforts in the technology side, really in the kind of the Salesforce ecosystem. So I went to, they have this thing called Dreamforce, and I was fortunate to kind of be in the executive track, and they had a whole segment around, it was the first time I've heard of blockchain. They were talking about quantum computing, Internet of Things, and kind of this whole idea of fourth industrial revolution. And that's when it all kind of triggered in my mind. And I went back the next year and was a speaker at the FinTech Forum at Salesforce. And that's when I was at a different institution at the time, but that's when I sort of hatched this whole idea of digital tools, human touch, and how do we take that technology and combine it with relationship, and then to fast forward to Fourth Capital, and now to have that platform and the people and the support of an owner to kind of make this a reality. So I'd say 4 or 5 years ago was when I first got kind of introduced to blockchain.
Awesome. And, I think maybe we can transition now. I think we can start the conversation with you, Stephen and Bill, but I'd love to kick it off with hearing what are your thoughts on, there's been a lot of news on banks starting to integrate Bitcoin into checking accounts. What does that mean for you? What does that mean for, investors, consumers in the United States? And I will say, if people have questions, we did receive questions, of course. If you submitted them, we will try to hit some at the end, but please feel free to put them in the Q&A as well.
Yeah, so for us, we're actually going live next week with our clients. We'll be able to buy Bitcoin directly from their bank accounts. So I think we're kind of on the front end of that. I think it's an interesting space to be in. I think from our perspective, a little bit different mentality. I mean, I can give all my opinions about Bitcoin and what I think, but it's not really relevant per se. I mean, our approach is to make it as easy as possible for our clients to use their money however they want. And there's certainly a demand for clients to have ease of access relative to buying digital assets. And so, to be able to facilitate that with some of our technology partners and make that literally a couple clicks, you hit buy, it's real time, comes out of your checking account. And if you want to sell, it's the same thing. So we're excited to be able to do that. I think, that's kind of the opening piece for what we think is a longer term strategy. We're looking at things along the lines of potentially you can take your interest on your accounts and have that paid in Bitcoin rather than dollars. Potentially some reward programs that would pay in Bitcoin, and then ultimately working toward being able to leverage that Bitcoin right through our platform and essentially have a line of credit connected to the value in that wallet. So kind of new, exciting. We're excited to bring that to our clients and see where it goes, and to be one of the first people to do that.
Incredible. And I know Stephen and Brian, you kind of had a long conversation on this on your podcast last week. So, I don't know, Brian, if you have particular questions as we have Stephen on from your perspective that you'd like to ask him about this asset class, or where you'd like to, you're in the driver's seat. Where would you like to take the conversation?
Yeah, first of all, I would say, one thing that I've really appreciate about Valkyrie, I think there's a lot of similarities to what we're trying to do. And it's this idea of being a purpose-driven institution. And so I love, what you guys are doing with the planet, people, purpose, profits, because that's what we're about. It's about long-term, how do we add value? And there's a bigger purpose than just making money per se. So Stephen, kind of for the audience sake, what kind of led you to Valkyrie and away from Guggenheim and some of that more traditional finance?
Yeah, that's a really good question, Brian. When I was at Guggenheim and most of my time in traditional finance, I spent in fixed income. And as what we've seen, recently, even though bond yields have gone up, we're still at 192 on the 10-year, which is a lot of yield considering CPI is at 7.1. So on a real basis, if you're just holding cash, you're losing 5% a year in purchasing power, and that's if you really take CPI to be the true inflation number. If you really take a look at the effect that inflation has right now on real people, we're probably talking somewhere, around the 18% mark as far as inflation goes. So your purchasing power is really falling apart at the moment, and has been for at least a couple of years now. So if you look at the bond market, and I remember, Bill and I were just catching up on this. So Bill and I worked at Guggenheim together, managing portfolios mostly in fixed income, and we got into really esoteric type bonds and strategies, and things that a lot of people weren't doing. I mean, a lot of our portfolios were 30% asset-backed securities, which and not mortgage-backed securities. These were non-mortgage asset backs, which was really unique at the time, but it was the only place where you could find yield for a lot of our clients. And as even those yields have compressed along with the rest of the bond market, back in 2016, I just sort of looked at the market and I said, I think yields are going to continue to go down, and it's going to be harder and harder to find returns. And I want to go into an asset class that is a little bit more frontier, that is brand new. And back then I thought that there would be an opportunity in the future to really develop this asset class. And sure enough, in the last couple of years, it's really come to the forefront as a real asset class that people are making allocations to. So I hope it was a good move. It's certainly more exciting.
Yeah. No, I think it's interesting because you just hit on, I think Bitcoin means a lot of things, or digital currency, but I'm just using Bitcoin as a term. But, one of those being store of value, right, in an asset class. And so kind of talk a little bit about how maybe you personally and Valkyrie view the space, because some people look at it as an actual currency where they're using it to buy and sell things. Others are thinking of it as an asset class, maybe similar to gold or whatever. How do you kind of view all of those different segments and uses of the space?
Yeah, well, Bitcoin certainly is unique. It is a currency. That's what it was built to be. That's what it was meant to be. The title of Satoshi's white paper was peer-to-peer electronic cash, right? And that's really what it was meant to be. So if you look at currencies around the world, here in the US, we have a currency, the greenback, and we use it within the borders of the US and sometimes outside of the borders. But if you go to Spain, you've got to go to go exchange your dollars for euros. And what's really unique about the euro, not to go off on a rabbit trail, but historically the southern countries in Europe, back before the euro, they were able to inflate their currency during tourist season, and then deflate it when it wasn't tourist season. And then the more industrial countries in the north and in Central Europe would usually just, their currency would be pretty stable, right? And they would always want to deflate it for the most part so that they could, export things. And then when the euro came about, the way that a lot of the southernmost countries got around it was when you go and change money during tourist season. If you notice, if you go to somewhere like Spain or Italy or Greece, there might be a 5 to 10% charge, on the trade to euros, where you don't have that on the off season or in the northern countries. So if you look at just going to another country and trading to use a currency somewhere else, and no matter where you go, you have to trade and use that currency, and then you have to trade into another currency and use that. It makes sense because it's the currency within that border. But we live in a distributed digital age, and Bitcoin, really the way I always saw it, was the currency of the digital economy. Not one with physical land borders, but one with people interacting and spending things that you don't want to. If you're let's say that you're a video game publisher. This is a good example in the US, and you've got a studio in Australia that then outsources to people in Romania, and Ukraine, and these are real problems, by the way. I'm not making this up. You've got to pay the people in Australia in the Australian dollar, and then they got to trade their currency to the developers that they're outsourcing to in other countries. Bitcoin kind of solves that problem. You just send Bitcoin, you send Bitcoin, you send Bitcoin, send Bitcoin, and you don't have your exchange fees associated. And that's really how a digital economy should work, and that's how the currency of a digital economy should work. So I see it as a currency. However, it will always trade and act like what other people view it as. And sometimes people view it as a commodity. Some people have said gold. I think gold, I don't really like the gold example so much. Some people treat it like a risk asset. You're buying into a network, sort of like the internet, and it trades like NASDAQ stocks sometimes. Its correlation will vary based on how people are treating it and how people are trading it at the time. And I think as the network grows and as the size of the Bitcoin network grows and the use case grows, it'll act more and more like a currency. But until then, it will act like these other things. Where I think it's headed next, where it's going right now, is there's scarcity in a lot of commodities at the moment, due to supply chain issues, due to mining issues. And I'm seeing Bitcoin act like some of those scarce commodities. There's a limit to how much can be produced right now. There's a limit to how much can be shipped. And Bitcoin has a limit to how much can be produced. It'll always ever be under 21 million. So scarce commodities and Bitcoin will likely have a correlation going forward in the next 6 months.
Yep. Yeah, I think, it's interesting because it's bringing in a lot of participants for a lot of different reasons, which is what always kind of happens in a new or emerging market. So I think, a big part of this from my perspective, just like anything new, especially in finance, a lot of it's about education. So thinking kind of from a traditional banking standpoint, when online banking came out 25-ish years ago, everybody was scared of it. And then obviously now, a lot of people only want to bank that way. So thinking kind of about the education and how we get wider adoption of some of these, for the sake of the audience, because I've heard you explain this before, and I love your answer. What is blockchain?
Yeah, and just to make it really, really simple, it's a ledger, right? At the bank, you have a ledger. I'm gonna really simplify it down because your ledger is probably more complicated today than it was 20 years ago. But imagine having an Excel sheet with all the people that are clients of your bank on the Excel sheet. You've got an amount in the next column that shows how much they have, and then every time they want to make a transaction, you'll put debit or credit this amount, and then the next day debit or credit this amount, and then the next day debit or credit this amount, and then at the end, you add it all up, and that's how much they have at the account at the end of the day. The reality is most ledger systems work off of something very simple like that might be a little bit more complicated. Well, that's essentially what blockchain is, especially for the Bitcoin network, right? It's a ledger that shows all the wallets or all the accounts that people have and how much they have in them, all their debits and credits for the last 10 minutes, and then every 10 minutes, a snapshot of the last ledger will be taken, and then all the transactions that happened in the next 10 minutes will get snapshotted and put it on top, and then the calculation occurs. And then 10 minutes later, that entire stack of data will then be snapshot again with all the other transactions that happened in the previous 10 minutes layered on top of it and calculated. So just imagine all these Excel files. If you're an accountant, you calculate the ledger, and at the end of the day, you have an Excel file, and then you create a new Excel file, and you make additional transactions, and new Excel file, make additional transactions, but you're saving it, putting it all in one place. That way, at any point in time, I can look back, I can look at the current block of data that's being produced right now, and I can look back to every transaction that happened every 10 minutes, all the way to the Genesis block, the original block that was produced for the Bitcoin network. And this is what causes Bitcoin to be pretty secure. Because if you wanted to try to hack it and make it change to the newest block, and change the data, you would have to go to every single block, and all the people that are running nodes and hashing these blocks, they would see if there was a problem. And really, all these people are validators. You know, they're validating previous data sets and calculating new data sets. So when people use the word Bitcoin mining, it's actually kind of a confusing word. I actually like validators better. You're validating the data, and you're producing new data on top of it, and you're constantly validating current block all the way back for security.
Yeah, I love that answer, because you know, it really simplifies sort of what's happening. Because I think, you know, a lot of the conversation around this is it's sort of like a black box, but it really isn't when you get right down to it. So I'm gonna switch gears slightly, since I'm the, you know, air quotes, traditional banker on the call. You know, there's certainly a segment of the space that thinks banks are maybe going away, and this is, you know, a totally different way that we'll do business in the future. But, you know, how do you see banks playing a role in this? Or, you know, what things should banks like Fourth Capital maybe be thinking about as we approach this space?
Yeah, and I'll take this one, and then I'll hand it off to Bill as I go onto another media. But I think that's a really good question, because, you know, first of all, you know, I'll just make known that, you know, one of Valkyrie's main banking partners is Fourth Capital, for the very reason that you guys are innovative, that you're local for us as well. You know, we're trying to grow the same ecosystem, but you're so innovative in the things that you're doing. You're way beyond a lot of the other banks. And the attitude of letting your customers decide what they want to do with their money, because it's their money, you know, just monetary autonomy, is really something that most banks don't have. And that's the number one thing that a bank should have, right? I mean, you should allow people to do what they want with their money and give them tools to do so. Where I see banks playing a role in the future is not just providing services for traditional money, you know, like dollars and other currencies, but also allowing people, and I know you've only taken the first step, and it's going to take a lot to get there for any bank, but to allow people to start making transactions in Bitcoin, and finding a way to store it, or whatever currency you want to use, right? You know, whether it's euros or dollars or Bitcoin or some other digital currency. So that's where I think, you know, what we see in the next 3 to 5 years. I don't think we get there in a year or two, but I think we might get there in 3 to 5 years. And then the other thing is allowing those transactions more easily around the world, you know, and again, that's a problem that's more on the regulatory front, right? You know, you've got to AML every single person and every single bank that you work with, and when you're sending money, and that's just what the rules are in the U.S. and finding a way to fall within that rule set and allowing people more autonomy, I think is going to be the biggest problem, but the biggest opportunity.
Yep. Well, certainly appreciate that. Appreciate the relationship. Go check out Stephen on TV. Congrats again on the ETFs. Great chatting with you.
Thanks, Brian.
Thanks, Stephen. So, Brian, Bill actually has some questions for you.
Yeah.
If you're okay to switch gears.
All right.
And I just wanted to take this moment, Brian, just before I speak to, we have Lori and Annie on the team. And I wanted to thank Stephen too, like what a successful launch today. And I have to thank the entire team. I think it was a team effort to get this going. And I woke up today with a smile, being part of this team. So thank you, Lori and Annie and Steven and Leah, obviously, and the entire, and John and everyone. So, but I'll continue. Brian, one question I wanted to ask you is, so we obviously have our innovative balance sheet product, and we were looking at banks and how they use Bitcoin, how they're using crypto. And one story that came about like 2 weeks ago was two New York banks, or I should say one Brooklyn-based bank, and as well as one upper state New York bank. And they also did the same. And I was really excited when I heard that you guys are starting to use or allow clients to transact in Bitcoin. They did the same. We did a little more digging in terms of why they wanted to do that. It was for more international. They had a lot of international clients. They were sending, they were trying to find an easier way to transact with probably families from overseas and stuff like that. And I just wanted to ask, why did you choose to allow your clients to transact in Bitcoin? Because for me, that is the future and the part of the innovation that's necessary in the financial services sector.
Yeah, I think, Stephen probably hit on it, and that kind of phrase, monetary autonomy. That's really how it, the genesis for us is this idea of it's your money. How do you want to use it? And I think, for a long time, traditional banks and the industry in general have kind of had this parent-child relationship with a lot of their clients.
Yeah.
And it turns into, well, we're going to tell you what you can do. We're going to tell you what you can't do. And, I think we're trying to flip that on its head a little bit to say, it's not our job to tell you the rules. It's our job to give you access.
Yeah. That's right.
And I think access is the key, whether that's through digital assets. There's a lot of different ways to define access. There's a whole underbanked or non-banked population out there, which is a whole different conversation, but it all kind of ties into that same idea of how do we give people access and allow them to kind of do with it what they will. There's different banks kind of going about this different ways. Some of that I think is related to technology partners. Some of it might be where you sit and who your specific regulators are. So, like I said, I think the continuum of starting out, allowing people to start to buy and sell Bitcoin, and that leads to maybe some other things, which, we've got clients today with a fairly significant amount of Bitcoin on their balance sheet. So how do you put that on your PFS?
Right.
How do you go about, if I can leverage real estate, or if I can leverage a marketable security portfolio, how do you start to be able to leverage and use, Bitcoin, which might be on the same PFS and balance sheet. So that's sort of how we're trying to think about it more from how do we serve our clients and build on those relationships as they want to play in this space, is kind of how we're approaching it.
Yeah. Do you see, my wife's in real estate, and she says a lot of these younger families that had crypto exposure early on, and obviously that's grown in value and stuff like that. Do you see a lot of mortgages, more like clients seeing mortgage products with Bitcoin, or how do you recognize as a bank Bitcoin on their balance sheet and stuff, and for their own positive purposes, like getting a mortgage and stuff?
Yeah, I don't think it's quite there yet from a mortgage perspective. Just from the standpoint of mortgage is probably the most regulated thing. It's hard enough to take an entrepreneur or somebody that gets paid on a 1099 and fit them into Dodd-Frank.
Oh yeah, I know. Yeah.
So anyway, we can do that webinar later.
Another fireside chat. Yeah,
exactly. But I think the idea of, if you're an entrepreneur, business owner, maybe investor, how do we get creative from Fourth Capital and saying, okay, if we can verify they have, X amount of Bitcoin, we know that's a tradable asset. Why aren't we willing to look at that as we would any other tradable asset and apply whatever margin or percentage based on volatility? And, you know, that probably starts a little bit lower. And then as the volatility decreases and the market matures, then you start to narrow that down in terms of what we're willing to do. But it's sort of stepping back and being thoughtful about it, kind of with the idea of if it makes sense, let's do it, as opposed to it being the boogeyman, you know, kind of out here. Because, you know, it's interesting, the people that are already been in this space. And one of the stories I like to tell, so we had Stephen, just for the audience's sake, we had Stephen at one of our fireside chats here at our bank. And one of the people that came actually was a gamer, and about a decade ago got paid out in Bitcoin. And so he's been in the space for about a decade. And so, you know, when we see people like that, and how do we bring them in or expand on relationships for folks that are keen in this space? And so that's how we're approaching it at Fourth Capital.
Yeah, no, it's, again, I was smiling when you told that story, because I think that it should be done. It's just the beginning. Bitcoin is just literally, it's a maturing asset. 2021 was a year of growth. And I think we're going to see 2022 and as well as the years to come as more companies, and I mean, a diverse amount of companies and sectors embracing Bitcoin and using it as a transactional, as you know, as a more form of utility. So it's great. I'm really happy for us. So congratulations on that.
Thank you.
Yeah.
Well, I got a couple questions for you.
Yeah.
So, you know, kind of being the running the ETF program there at Valkyrie, how do you view ETFs, and how should maybe the audience think about an ETF relative to owning the actual physical asset itself?
Yes, that's a great question. And I'll just speak, I mean, it's the perfect example is what we offer here at Valkyrie with the 3 products that Lori mentioned before. Obviously, you have BTF as a direct exposure to the cryptocurrency. You can't get more correlation with that. I mean, it's just, you want Bitcoin, you got it. The second one, which is more of a, I would say, more mild exposure, right? It's with our VBB or balance sheet opportunities. And again, we selected publicly listed companies, mostly based here in the United States, but I do see some more international exposure coming on board. But it's just basically a more less directly correlated to the price of Bitcoin, but people are familiar with it from a company standpoint, right? Tesla, MasterCard, PayPal, Block, all these kinds of companies that use Bitcoin have it on their balance sheet. Tesla has had some headlines that about how much they own. They own about they purchased it. A fair value is 1.5 billion, but obviously that's grown since they purchased it last spring. But in terms of other we also select the smaller companies in terms of how they use Bitcoin, how they transact with Bitcoin. And that should lead into the mining product. There's miners that launched today. Miners are a little more correlated, a little more aggressive. It's definitely a growth sector. I would say that it's probably, we were excited about this product, not only for the, like if you backtrack a little bit, they saw a tremendous amount of growth due to the increase, mainly due to the increase in Bitcoin lately. But they are also innovators themselves in terms of balance sheet, right? They literally mined Bitcoin, hold it on their balance sheet, uses capital for further investment. And it's really, really exciting to see the growth that they personally are taking upon themselves to obviously to become a better company, to be, to lead this particular sector. And I think that we're going to see a lot of growth towards the later part of this year, not only with the appreciation with Bitcoin price, but also with they're literally taking delivery of miners or these CPU units towards, beginning the second quarter, and you're going to see a lot of that efficiency and growth in the performance of these miners.
Yep. Well, I love what you guys are doing, because I think, you're supporting the whole ecosystem around the space.
Yeah.
And ultimately, if it gets more mainstream and it gets more adoption, then that helps everybody that's sort of inside the space. And so for you guys to take a broad approach to supporting miners and all of these different things, I think is a really big deal.
Yeah.
So I kind of asked Stephen this a little bit, but I'll ask you a little bit different way. So, thinking about over the next year or two or whatever, I mean, obviously we're all doing some of these things because we've got kind of the mentality of a disruptor. So what do you think over these next couple years, where are those areas of disruption, or maybe some places that haven't been touched yet that maybe need to be shaken around a little bit?
Yeah, I think that, and again, back to financial institutions, some of my clients at Guggenheim were insurance companies and stuff like that. I think that not necessarily disruptor, but it would be like think box a little bit, right? I heard that I follow definitely the insurance industry, and how they're adopting blockchain, and they're adopting it from like an operational standpoint. I think that that's probably one of the disruptor themes that you're looking for, in terms of, just because a lot of these ways it's archaic. A lot of these ways of operations are archaic. And just like Stephen mentioned, in his definition of what blockchain is, it will be secure, it will be transparent, it's a lot more efficient. I think that the more banks like yourselves adopt it, in terms of not only Bitcoin but also crypto, I think that you'll start seeing more technology products, more technology-based strategies for the future. Maybe that's what a lot of these sectors, not only finance related but also consumer related, that's what they needed, right? They needed this kind of innovation. I think that it's also, and that kind of opens up the conversation to DeFi, right? And all these other decentralized finance opportunities. Whether we like it or not, NFTs are here to stay. Everyone's talking about it. In terms of other kind of like stable coins, there's a lot of regulation talking about that. And with that regulation, right, I think the government's trying to get a handle on this to make people comfortable, right? Feel more secure in investing in the space. I may be speaking for myself, but I think it's the general consensus in our company. We welcome the regulation. I think that it's necessary for folks to feel more secure in investing in this product, as opposed to just thinking that they're just kind of there's not really any kind of utility for it. There is, and I think it's really exciting that every day there's more headlines on this theme of innovation, of going in and rattling things to making sure like maybe some stuff in traditional finance just didn't work, and maybe crypto can solve that for them.
Yeah, I think from our perspective, I think the technology, not just the crypto side, but the technology itself.
Mm-hmm.
If you think about payments and the existing rails and how we do wires and ACH and all of these different things and settle real estate, it seems as though blockchain would be a much better way to do all of those.
Yeah.
If you think from a bank perspective, probably one of the largest risks is wire fraud.
Yeah.
And the hoops we have to jump through and all of these different things. So I think that payment space is one that we're definitely looking at to see, okay, how does this evolve? Even things, same day payments, real time. Most banks are still in a batch overnight processing.
Right. Yeah.
So there's a lot of different ways that, maybe even clients don't necessarily see it, but that we got a long way to go to even with current technology, not even future state technology, that could really improve the way that we operate and serve our clients.
Yeah, and perhaps we're looking at the beginning of a transition, right? It's a matter of, I'm teaching my son, I have a sophomore and an 8th grader, right? And I'm telling them to be more in IT related, because there's so many opportunities that involve technology. And this younger generation is eager to learn, they're eager to do it, and they want to help. And I think that looking and for jobs, I think it's going to be directly correlated with technology soon, whether we like it or not, meaning you and me, whether we like it or not, it's technology, you know, it is the way of the future. And it's just, perhaps we're in the beginning of a transition here.
Yep. Well, Lori, I think turn it back over to you.
I was just gonna say, I heard you guys talking about payments and fraud, and we just found out that the FBI was able to track down money from a hack that was actually took place back in 2016 on the virtual exchange Bitfinex. So pretty cool. We're seeing more of this. Obviously, it's easier to track the money on the blockchain. So we think this is a good thing for the future of the whole financial services industry. But, you know, move to another topic that you brought up, Brian, that I would love to hear your insight on. You know, you talked about our commitment to purpose and profit, and we've made a commitment on our website. We announced last week that we're giving 1% of revenue to Stripe Climate, which is it's investing in carbon removal portfolio, which has been shown to really help in combating climate change. You know, we're actively integrating into Valkyrie, you know, making sure that purpose and profit are tied together, because we think that's kind of the future of corporations. We think it's important and critical that you grow that way. And that seems like that is also the mission of Fourth Capital and how you guys are building out. And I'd love to hear, you know, how you're thinking about that, you know, just from a corporate standpoint.
Yeah, I think, you know, from our perspective, very similar mindset. And so we really think about it in terms of how do you approach, you know, the purpose or the reason Fourth Capital exists. And so the reason Fourth Capital exists in our mind is to add value for what we consider to be the four pillars of community banking, which is client, employee, community, and shareholder. And so approaching it from a how do we add value for our clients, employees, and community results in shareholder profit or gain is different than getting in a room and saying, how do we make money for the shareholder by having goods and services that we provide to clients. And so when you flip that on its head, it's a different approach. You know, specifically, you know, our tagline's decidedly local. So our primary focus is on Nashville and the surrounding area. That doesn't mean we won't follow relationships like Valkyrie or whoever, wherever they want to go. But, you know, from a community and purpose standpoint, it's all about how do we affect things right in our backyard. So we're doing a lot of things with children, education, healthcare. Those are kind of near and dear to our heart. You know, we're the friend, we're the neighbor. So it's all about how do we lift up the community we live in. And we really try to, we have this thing called Fourth Fridays, which is once a month. And we dedicate ourselves or a portion of us to going out and doing volunteer, because it's not just about writing checks. It's how do we create a culture where our people are investing their time and their talents. And I think as we go forward, you know, there's a lot of talk about recruiting and talent shortages and all this. And, you know, compensation's obviously a factor, but more and more people want to know the why and how does this tie into something bigger and the things we believe in. And it's not just about cashing a check. And I think, you know, we've got some reformed ex-Wall Streeters on here that I think, you know, at one point or another may have woke up and said, I want to do something bigger than just, you know, my day-to-day trading book. And so that's kind of all embodied in Fourth Capital and how we approach what we're doing in terms of adding value with the reward being the payoff, the reward not being the objective.
Right. And I think, that's interesting, and it really ties in well to the overarching crypto ecosystem. And I don't know how much, people are aware of kind of the different protocols or, the Bitcoin community, but community is very central to all digital assets, whatever they may be. You're only as powerful as the community that's backing you. When we think about protocols, which are altcoins, I like to think of them as, startups or companies that are all focused on building out their niche. And, you're backing that team because you believe they're best positioned to do it, but you're also backing like their mission to empower this whole blockchain economy and move it a step further. So, I think it's really cool to see that Fourth Capital is doing this. We hear it from investors all the time in terms of, thinking from an ESG perspective, which ESG, Bill and I have a lot of conversations on this, and maybe Bill can speak to kind of how we thought through ESG from an ETF perspective. But unfortunately, when you have, this desire from consumers or investors to see, positive impact from companies, you have companies saying they're doing things that they're not doing. And we've had that problem in investments with what we call greenwashing, which is saying that they're thinking actively about, environmental, social concerns in a portfolio, but they're not. And it's kind of made the word ESG be almost a bad word in some circles of financial services. So it's really good to see people actively, making commitments to their customers. And I know, Bill, if you can speak to when we were thinking through building WGMI, which is our first really ESG focused or renewable energy focused product, how, you thought through that from a, portfolio management standpoint.
Yes, thank you. When we first looked at it from this theme, first of all, we thought that the mining industry, obviously we wouldn't launch or even think about launching a product if we didn't see that there was a good amount of growth in it, okay? What we did notice was that there was more renewable energy themed or more strategy involved with these miners. And a lot of the more successful miners, it did implement this strategy already. The way they did that was they were able to have these flexible relationships with the energy grid, and also seek out areas in North America mainly of areas that use renewable energy. A lot of this is wind, solar. Also hydropower is a major contributor to these energy grids where these miners are. But one thing that, as Lori mentioned, that, is basically you can talk the talk, but these guys are walking the walk where they are, there was a meme, I think that Leah sent over to Lori and me where, great, another ESG product or something. And I'll spare you, I think it was some kind of car crash or something like that. But we took it another level where, unfortunately in this day and age, I think, and this is my personal opinion, that when somebody says ESG, you ask how did they do it? And you could solve these problems or say that you're ESG by simply purchasing stuff, right? You could purchase these credits in some way or another, and they'll get you qualified to put that ESG. We didn't allow that with the current basket of miners. What we did was they needed to present proof, and we actually talked to a couple of managers on this, a couple client relations folks on saying that you guys use a certain percentage of renewable mining. And we put the conservative in our basket, it's on the prospectus, a conservative limit, or minimum 50% of renewable energy usage for 80% of the miners. That averages up to 77%. And as Lori and I kind of discussed yesterday, more than half of the mining companies have closer to 100, if not 90% renewable energy. That comes with low overhead. And we just think it's a great, that is one of our main drivers of growth in this particular product as well as the sector.
Yeah, I mean, I think we're really excited to see, all the transformation that's going to take place, not only in our sector that we're working in, which is digital assets, financial services, but banking. I think that, this is going to become more and more prevalent in terms of a way of thinking. But, we're coming to the end of time. I did want to close with, asking both of you kind of what is most exciting or most anticipated for you in the digital asset, or it could be like Brian for you, like the banking world, financial services in general. What is the most exciting thing coming down the pipe, or the most exciting thing that you're hoping is going to happen in the next year?
Wow, that's a big question. Yeah, I would say, obviously some of the stuff we've talked about today, but more broadly speaking, I think, the idea of I think the technology and where banking is going is catching up with the idea of how do we combine that digital tool with human touch. So we've been able to transition, and when I say we, I say Fourth Capital, but also kind of the banking industry in general, more to open API, and how do we get kind of best in breed in every different area for the client, where it used to be you were core centric. So if you had your core company, then you had all the surrounds and so on. But, as we're able to start to implement some of these new technologies in different areas, like our digital banking partnership is really what allowed us now to offer the Bitcoin. And we're doing similar things in lending and other areas. And the vision of combining this high service, really high quality human experience with those tools is something we're really excited about as all that comes together.
That's a great answer. Bill?
Yeah.
I'm excited.
That's a tough answer to follow, but I'll just borrow a little bit. Of course, I'm in the industry. I think, and I'm seeing this innovation going on firsthand. But I'm going to take it a different route, where on a personal level, I'm excited what DeFi, all these NFT opportunities, all these other kind of more social, like social integration issues, and literally social, meaning with art and music. As you can tell, I like music, and I hope that, even from like when I was a young lad, I was hoping that I could interact with the artist, or have that concert experience more meaningful, or that museum exhibit I saw like in New York or in Europe or something, and more integrative that way in terms of technology from an education standpoint. I hope the technology kind of comes together and make me experience something that I think is valuable for a person's soul. Not only from a financial standpoint, maybe they could experience some obviously financial growth in some of these kind of tokens or some of these coins, but I'm excited about that. From the financial standpoint, obviously, like we talked about, I think that it's just the ongoing investor, like a typical investor, embracing crypto, investing Bitcoin, using it for themselves, and finding out that it is part of it could be a part of their personal portfolio at home, and hopefully it pays off.
Wonderful. Yeah, I'll say, Bill, I'll call it back to I think at Valkyrie, we're really excited to see what happens in the regulatory space, because, we do view this as an asset class of the future, and we want to provide exposure to investors in vehicles they know and understand. And that takes regulation, and we're really looking forward to the SEC actually came out today asking for the public to give input on the Bitcoin spot ETF. So we're looking forward to sharing a research report, which we'll certainly share with all of you, that has been in the works for 6 or 7 months on-chain transparency in the Bitcoin network, and how we can get to a Bitcoin spot ETF in the United States. But I want to thank everyone for being here. If you did submit your CFP information when you registered, then we will be submitting that for CFP credit. I do want to note that it is running on a little bit of a lag on CFP's end. We are here as a resource to you as you're trying to navigate digital assets. Please always feel free to reach out if you have questions. And we will be back in another 2 weeks with our Bitcoin Answers series. Thanks so much. Have a wonderful day, everyone.
Thank you, guys.
Thank you.